Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm excited, so excited, of course, to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. It has been quite a profitable week for us all in this community across all the assets on our watch list, as we did capitalize on the weakness of the US dollar across board, giving us some significant amounts of profit. Well, since the week began, we have been monitoring three financial assets from our watch list, which includes the USOILSPOT, the GBP USD, and of course the XAU USD, my favorite asset. And in fact, I'm very glad that we were able to capitalize on that momentum. It actually came as a surprise. We never expected a significant traction like that, especially when we are looking forward to major US macroeconomic data. But lo and behold, we are profitable, and congratulations to everyone who did capitalize on this opportunity. So today is another day as we head into the second half of the week, and of course we begin to see some interesting situation come up today as market participants will be approaching the last trading day of the week, where they will be intending to round off their trading activities. So we are going to be taking all of that into consideration. And in fact, today I have quite simple trading setups that we will be using to guide our trading decisions for today. And for those of you who are with me on both my Trading View and Telegram platform, you must have gotten an update as to how we will be managing our positions today. So we are going to be expatiating on that and see how we can use the historical data we have on the chart to strategically position ourselves for the next move, and of course manage the existing positions we have. So I encourage you to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. You may be wondering what this is all about. What is it that we really do during the Forex Morning Mastery? Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. All right. So with that being said, here we will be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiments today. And our daily routine is to check on the economic calendar, of course, as we know that these fundamental factors has a way of manifesting on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, our focus has been on the economic features from both the United States and the United Kingdom economic docket. Now, so far this week, we've had some interesting events, which of course had one way or the other had some impact on the market dynamics. Now, on Tuesday, we had the BRC like-for-like, which actually came in below expectation, affecting the pound sterling a little bit, resulting in that retracement move we saw on Tuesday morning. And then we saw the ISM Services PMI from the United States on Tuesday as well, coming in below expectation, and of course resulted in that supported the negative traction against the US dollar. Now, yesterday was another insightful one, as we had some couple of events here which affected the US dollar and of course the pound sterling as well. One of them is the budget report, which we were looking forward to from the Chancellor Jeremy Hunt, and of course the presentation was quite hawkish somewhat, I will say, as he did acknowledge the challenges faced by the economy due to financial crisis, pandemic, and the European war's energy crisis. He also went on to mention that interest rate will stay high to combat inflation, which for me is a very positive signal for the buyers of the pound sterling. Additionally, he also forecasted stronger economic growth for 2024 and 2025 compared to the previous estimates, which is another positive signal for the pound sterling. And so this optimistic remark is going to be helping us to in conjunction with our technical structure to help us position ourselves for the next move. So you don't want to miss out on that one. So stay tuned in. Then we also had the ADP employment change yesterday, where we were looking forward to a higher figure from the previous month at 150,000. That was what economists were projecting. But unfortunately, the data came in below expectation at 140,000. Now, this went on to further affect the US dollar, as market participants dropped the US dollar due to this event as well. And the Fed chairman also testified during before the Congress yesterday, where he did reinforce expectations for potential interest rate cuts later this year, which further is affecting the US dollar negatively. So we are still going to look into all of this. Now, later today, Thursday, March 7, we have one high impactful event, that is the continuation of the chairman's testification before the House of Congress, coming up, continuing later today. So we will be looking forward to what he will be saying as well. Then, in addition to that, we were also looking forward to, there are other couple of mid-tier economic features here, but I will only talk about the most important ones here that we would like to look forward to, and that is the Challenger job cuts, which is coming up in about 4 hours from now. And this is a data that provides information on the number of announced corporate layoffs by industry and region. Now, the report is an indicator used by investors to determine the strength of the labor market. So usually a high reading is seen as negative for the US dollar, while a low reading is seen as positive. So we're going to be looking forward to what the actual data is going to be like. So for the previous month of January, we had 82,307,000 job cuts. So we are going to be looking forward to what the actual data is going to be like for today. So I encourage us all to mark out this timing so that we can be on standby to capitalize on any move that may come up from that event. Now, in about 6 hours from now, we are going to be looking at the initial jobless claims. This is another data from the labor sector, which of course will give us a further insight into how well the labor sector is. Well, the data so far hasn't been promising at all, so we want to look out for more. And the initial jobless claim measures the number of people filing first-time claims for state unemployment. So a larger than expected number indicates weakness too. So we want to be looking forward to what the actual data is going to be compared to what market expectation is, which is pegged at 215,000. So these are the most important events that we will be looking forward to today. Then later in the day, we are going to be listening to Mesta. Mesta is also a Fed official, and she is the president and CEO of the Federal Reserve Bank Cleveland branch, of course. So she's going to be giving a speech today, and this will be giving us an insight into the monetary policy outlook and the interest rate projection for this year. So these are the events we will be looking forward to. And as technical traders, we do understand that the anticipation of this event has a way of influencing the behavioral patterns of market participants, which will definitely reflect on the chart as price action. And what we are going to be doing today, as usual, is to sniff through the current market dynamics on the chart, looking out for structures and patterns that we will be using to strategically position ourselves for the next move. So with that being said, here we will be diving right into the business. And as usual, the first asset we will be looking at, unfortunately, I did not open down this chart, and my US oil usually take a longer time for it to load up. So let's see how long it's going to take this time, or probably I will just open another one, and let's see which one will load up faster. Okay. Sorry. Okay, so let's see which one loads up quicker. Okay, so it's still the XAUUSD here. Hold on a second. Still taking some time. Okay, here we go. I think it's finally loaded. So the next asset we are going to be looking at now is the USOILSPOT. And since the beginning of the week, we've had roller coasters of buys. We had sells, and then in the last 24 hours we saw selling opportunities. In the last 24 hours we saw buying opportunities after price did break out of that descending trend line. Now let's run through what really happened at the beginning of the week that led to the decisions we made so far. Now, at the beginning of the week, it was more of a consolidative phase as we saw price action confined within the $79.80 level and the $79.25 area, giving us an insight into the prevailing uncertainty in the market at that point in time. And usually, whenever we have a range-bound structure on our charts like this, we usually exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or price breaking down the support line of that range to give us an opportunity to sell. Though we have price break down the support line at the beginning of the week, and we did anticipated a retest of either the support line or that ascending trend line, we drew to inside selling opportunities. So with a sell stop order below the $79.25 area, we capitalized on that bearish momentum, and of course we did add another sell position at the breakdown of that key level at the $78.50 area. Now we had about two positions on the first trading day, dovetailing to about 150 pips thereabout before the bullish momentum took us out of that position. Now on Tuesday we were being on standby for buying opportunities, which unfortunately did not do very well, as we saw the buy position triggered at the $78.50 level, moved about 40 pips, but we saw how price nosedived to the downside, taking us out of that buy position in a loss. Now, as at yesterday, we decided that we will be, based on the fundamental factors we saw, and then the technical structure here on the 1 hour time frame, we decided to use this descending trend line as a yardstick to guide our trading decisions for yesterday's trading session. And one of the things we said here yesterday is that if price action breaks out of that descending trend line, we will be in for buying opportunities. Remember, we noticed that sellers were finding it difficult to break through or settle below that $77.70 area, signaling the potential that buyers may likely be taking over the market. So we were looking at the breakout of that descending trend line and the $78.25 level to validate a reversal pattern. So we took advantage of that move. We added more positions at the breakout of the $78.50 level and then the $79.25 area. And of course, we did have another fourth position triggered at the $79.80 level. And of course, the fourth position did not do very well. So we had 3 good positions where the third position went into a loss. And of course, if you had moved your stop losses accordingly, like we usually do, whenever price moves significantly in our favor, you must have been taken out with a reasonable amount of profit. And for those of us who capitalized on that opportunity, well done and kudos to you. So as it is right now, I want to consider that bearish move that happened yesterday to be a retracement of that impulsive move that broke out of that descending trend line. Now, the appropriate question we want to be asking ourselves this morning is how far will this retracement phase go before another wave of bullish momentum will happen? Now, from a technical standpoint, when price breaks out of a trend line like what happened here yesterday, we expect that price at some point in time will come back, retest the structure in an attempt to continue the uptrend move. Now, with the way things are going right now, will this bearish momentum get that far before another wave of bullish momentum will happen? Or will price action just respect the neckline area? Remember, for those of you who saw my video on the USOILSPOT at the beginning of the week, if you missed out on that session where we did a top-down analysis on this asset, I would encourage you to check the links right in the description box below, which will refer you to that video, and you will see how important that $78.50 level is. So on the daily time frame, the $78.50 level was serving as a neckline of that potential reversal pattern we identified, and of course we were looking forward to the breakout of that neckline to validate the potency of that reversal pattern. So this is the key level right here and serving as a neckline on the daily time frame. Now, if you look at what has been happening here since the later part of the New York session, you will see that the retracement phase appeared to be culminating around the $78.50 level, as you will see that despite the strong bearish momentum, as soon as price got into this area, we saw how it has become difficult for sellers to continue the momentum to the downside. And as a result of this, we might likely be seeing the beginning of another wave of bullish momentum. And looking at what happened yesterday, remember this was the same level that's incited that bullish momentum. So will the retest of structure be around this area? Personally, I'm already in the buy position here and having my stop losses way below the descending trend line to give enough breathing space for price action to move around just below the $77.70 area. So if it so happens that price action drops and do a sharp retest of structure, I will still be in a trade in anticipation of the uptrend move. So on the US All Spot, I still maintain a bullish bias on this asset. And of course, if we look at the fundamentals, everything is screaming bullish. Now, if we talk about the geopolitical tensions in the Middle East, escalation is still very, very high, and this is inciting concerns about oil disruption from the Middle East. Then we also had from the U.S. Energy Information Administration yesterday, where they reported a surge in crude oil stock, which rose for the 6th consecutive week by 1.367 million barrels instead of the expected 2.116 million barrels. Well, though there is a rise, but the fact that it is not as high as what was expected for me is a concern that there is high demand for oil in the market. And if there is a high demand for oil, our simple economics tells us that price may likely rise. Then on Tuesday, we saw the USAPI weekly crude oil stock data, which showed a smaller increase than predicted, with stockpile rising by 0.423 million barrels against the expected decrease of 2.6 million barrels. So for me, this is not still very significant to emphasize high supply in the market. Then the price of crude oil also can get a boost from a weaker US dollar. When the dollar is weak, it becomes, since the US oil is a US dollar denominated asset, and anyone who is buying the crude oil is paying in dollars. Now, if the dollar is weak, then oil prices become cheaper for those who are using other currencies to buy this commodity. Now, if it becomes cheaper, it will be a window or time for market participants to buy more of this asset, especially taking advantage of the weaker US dollar. And as a result of this could lead to a high demand, and when demand becomes high, price is likely going to rise. So these factors here continue to support the prices of US oil. And if we listen to what the Fed chair said during his testification before the House of Congress yesterday, he hinted that the Fed is considering lowering borrowing costs at some point this year during this testimony. And this could also push the price of oil higher. Now, furthermore, positive news about the Chinese economy, particularly the trade balance data that came in yesterday, added to the upward momentum in oil prices, as we saw China's trade balance for February exceed market expectations, reaching $125.1 billion, while the year-on-year import and export both saw increase of 3.5 and 7.1% respectively. That's phenomenal, and you know how important the Chinese economy is to the US oil market, as China is considered to be the highest importer of oil commodity, and when the economy is healthy and doing very well, the chances for them to import more oil increases, hereby affecting demand in the market, pushing price up. So that's how significant the Chinese economy is to this market. And with the data coming in from yesterday, it's a good signal for buyers of oil. Now, if we consider all these factors and looking at the technical aspect of the current market outlook, I still remain very optimistic that price will continue to the upside. Now, the right question we want to be asking is, when will that momentum happen? Will price retrace back into this descending trend line before another wave of bullish momentum will happen? Let's see if that is going to be the case. So we shall continue to hold on to a bullish bias as long as price remains above the $77.70 area, and if any form of reversal pattern forms here, maybe in the form of a double bottom structure, head and shoulder, or even a falling wedge, we mark out the neckline and buy the retest breakout retest of that neckline. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. You know how we do it in this community. We also try to take into consideration what opportunities the sellers have in this market and what are the conditions that we want to see on this chart that will make us shift our buyers from bullish to bearish. Well, for me to sell this asset, I would rather want to see price action drop below this descending trend line, which supported the bearish momentum since the beginning of the week. And you can look at how this trend line shares a beautiful confluence with the $77.70 level. Now, if price can break down the trend line and of course the $77.70 level, well, selling pressure below the structure will be all we need to join a bearish move to the downside. So this is the only condition that will make me consider selling at this particular point in time. So this is my simple view on the US Oil Spot for today. I will definitely be giving you updates on both my TradingView and Telegram platform if anything new comes up along the line. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next assets on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. If you have any question, you can drop it along the line. I will be checking the comment section from time to time. What else again? If you please, I'm yet to see some likes here. Kindly support the project by giving the video a thumbs up. It doesn't cost anything at all. Thank you very much as you do so. So moving on. So the next asset we are looking at for today is going to be the GBP USD. And on the GBP USD, we have been buying this asset since the beginning of the week. And if you are with me on Monday and Tuesday, I did emphasize that no matter what happens here, if any selling pressure comes in, I'm not going to be selling and only going to look out for buying opportunity or look out for the culmination of that retracement move of the bearish momentum to join that uptrend continuation. And to guide our trading decisions, we have a couple of ascending trend lines which we did identify on this chart. And of course, you will see that price action had consistently and uniformly respected this ascending trend line. So we had a couple of ascending trend lines here. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying. So this for us has been of immense help in guiding our entry for this uptrend continuation. Now let's look at what happened at the beginning of the week that led to the decision of buying this asset. Now we saw here at the beginning of the week how price action was initially confined within the 1.26670 level and the 1.26520 area to emphasize the prevailing uncertainty in the market at that particular point in time. And you know how we do it when we identify range-bound trading activities like this. We exercise patience and wait for price action to either break down the support line for selling opportunities or break out of the resistance line for buying opportunities. And of course, we saw how price never even came close to the support line, hereby negating any idea of considering selling the asset. So we saw the breakout of the 1.26670 level happen at the beginning of the week to trigger our first buy position. Then we added one more at the breakout of the key level at the 1.267, and since then we continue to add. We added one more at the breakout of the 1.268, which did very well too. And then we added another one here at the 1.267, which of course did not do well. So we had three positions that did well, while the fourth one went into a loss. So the first half of the first day of the week, we were running with about 80 pips in total after moving our stop losses accordingly to secure that position. Now on Tuesday, we begin to notice that price action is back into that area above our key level. And you know how we use our key levels in this community. When price remains above the key level, we obviously want to be looking out for patterns and structures that support the idea of buying that asset. Now, when we compared how the market participant behaved around this area at the beginning of the week, we saw that it was more of having a memory for buying power. And coupled with the fact that price action was trading above our key level, we decided that we will continue the momentum to the upside. And to capitalize on this one, we added new positions at the 1.26800 level. This was on Tuesday. Then we added another one at the breakout of the 1.2685. Then we finally saw a successful breakout of the 1.267. Remember, the previous one failed, which gave us a stop loss there. Then we saw another one added at the breakout of the 1.27130. This one also did very well as we saw price got into the 1.2733 before another bearish momentum happened, and with a duly moved stop loss, we were able to take in some reasonable amount of profits. I think we were able to make about 80 to 90 pips with the 4 buy positions we had there. And of course, the bearish momentum we saw there was considered to be a retracement move, where we were looking for when it will culminate again for another wave of bullish momentum to happen. Now, yesterday I did mention that I already have a buy position triggered at this point, and that for those of you who missed out, let's see if the market will break out the 1.2713, and I do hope you capitalize on that one. We also added one more at the breakout of the 1.273 yesterday before it took us out again with some small profits. And since since the later part of the New York session, we've seen how it has become difficult for sellers to push price to the downside. And it appears we have a barrier here where buyers continue to show or make a statement that price may likely continue to the upside. And as a result, we have another buy position triggered at this point in time. I do hope you capitalized on this one, as you will see that in the last 12 hours or so, price action has been oscillating right around that ascending trend line to still support the bullish idea in this market. So it still makes a lot of sense for us to continue the bullish momentum here. And if you look at it from a technical standpoint, the breakout of the 1.273 was a very bullish signal. Price has come back to retest the structure, looking out for reversal patterns that will incite the next momentum to the upside. And if we look at the structure, this potential reversal pattern, we have a level here. I want to be using the 1.27440 area to be serving as the neckline of that level. So I encourage us all to mark out this level as a breakout of this structure will be welcoming more buy positions here. So let's see if the market will continue the momentum to the upside, and if it does, a breakout of the 1.27440 level will welcome more buying opportunities. And of course, if price action goes ahead to break out of the highest level for this week at the 1.27575, so let me label that 27575, then we want to be adding more buy positions at the breakout of that structure. So we have two more positions to capitalize on today, maximizing the potential of this bullish move. So let's see how the market is going to play out today. So we should position ourselves right above the structure to capitalize on the uptrend. And if we look at the fundamentals too, everything is supporting a bullish idea, from the testimony of the Fed chair yesterday at the before the House of Congress, where he hinted at potential interest rate decreasing this year, and he also emphasized that the Fed is adopting a cautious approach, stating that they will closely monitor inflation before making any moves, and which for me is not a good signal for the US dollar at this particular point in time. And on the other side of the pond, that is in the United Kingdom, we had the Chancellor Jeremy Hunt's presentation on the spring budget, acknowledging the challenges faced by the economy due to the financial crisis, pandemic, and the war on energy crisis. Then he also mentioned that interest rates will stay high to combat inflation, which for me is a good signal for the buyers. If the interest rate remains high, then the pound sterling will become an attractive window for investors to put their capital in. And when this statement was said, we can see how the market had reacted to this. Market continued to remain bullish on this one. Additionally, he also forecasted that there is going to be a stronger economic growth for the United Kingdom in 2024 and 2025 compared to previous estimates. Now, this optimistic remarks and the narrative of higher interest rates in the United Kingdom, I think is the supporting factor for the pound sterling at this point, and it may push the pound sterling even further to the upside. So we do want to be on standby to capitalize on this opportunity when it happens. Then today, market participants will be looking forward to some key economic events that may likely bring some fresh impetus to this market. We did talk about this earlier on the economic calendar. We have the US weekly initial jobless claim, we have the trade balance data, and we also have speeches from Mester, who is a Fed official, and of course the continuation of the Fed chair's testification before the Congress. It will be going on today. So market participants will be very tentative, looking forward to data from this event to guide their decisions, and we may likely see some choppy market conditions before this event happen. And of course, we've been seeing that so far in the last 10 hours or so. As you will see, market activities has been range bound, waiting for some catalyst to push price in whatever direction it will go. So in summary, I'm looking bullish on the GBP USD today. However, it is also very important for us to consider the potentials of the sellers too as well, so that if selling opportunity comes, we will be on standby to capitalize on that opportunity. Now, what are the conditions that will make us consider selling the GBP USD today? Well, since we already have an ascending trend line in place, in fact, we have a couple of them. As you will see, this trend line here has been supporting the bullish momentum since the beginning of this week. Now, if we are going to consider selling, obviously we need this ascending trend line to be broken to the downside. And if we consider the strength of the bullish momentum since the beginning of this week, it will make a lot of sense to wait for confirmations before jumping into any positions. And what I mean by that is this: we will need price action to break down, retest the structure, the trend line, that is, we have breakdown, retest of structure before we can start considering selling these assets today. So if we are going to be selling, we need that ascending trend line and the 1.2733 level to be broken and retested before jumping into any sell position. And when I mean retested, I'm emphasizing that simply because a breakdown could turn out to be a false breakdown. So let's take note of this. And of course, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the GBP USD for today. If you have any questions whatsoever, or you need clarifications at any point, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the final assets on our watch list for today. And you can as well take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And please do not forget to give the video a thumbs up. Your likes are very, very valuable to me, and it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. So thank you very much as you do so. So I'll be with you shortly. All right. So in the absence of no questions, I want to assume that we are all on the same page. So with that being said, we will be moving on to the final assets on our watch list. So the final asset on our watch list for today is my favorite, of course, and that is the XAU USD, popularly known as the gold spot. And as you will see, the price of gold has continued its upward momentum, in fact, for the last 7 consecutive days, reaching a new all-time high at the 2,161-ish, as Federal Reserve's chair continued to push the narrative of imminent interest rate cuts in the year 2024. So it has been quite a profitable week for us, especially on this particular asset, as we have been buying this asset since the beginning of the week, and of course since the breakout of the $2,086 level on Monday's trading session. And for those of us who did capitalize on this opportunity, well done and kudos to you. Now, for the sake of those who missed out on our earlier session, and of course for educational purposes, let's run through what really happened at the beginning of the week. Now, right here on the 1 hour time frame, after trying to decipher where price action is likely going at the beginning of the week, we were able to mark out a consolidation phase as we saw price action confined within the $2,086 level and our key level for the week at the $2,080 area. And of course, when we have a range bound trading activity like this, we exercise patience, waiting for either the breakdown of the support line to give us an opportunity to sell. And of course, we can see price never even came close to the support line, and then we saw the breakout of the resistance line to trigger our first buy position. And since that moment, we have been buying. And for those of you who are part of the XAU USD live window, where we monitor the XAU USD real time, we were able to maximize the potential of this bullish move, adding more positions to our existing trade. And of course, one interesting thing about this trade is that every level we moved, every zone we moved our stop losses to, price never came into those areas, making us to be able to maximize the potential of the bullish move. So we added more at the 2,115, 2,120. We added another one at the 2,127 before yesterday's trading session. And during our live session yesterday, we begin to notice an interesting trading setup evolve on this chart yesterday, as we saw market participant anticipating the Fed chairman's testification before the House of Congress, and this led to a $4 range which lasted for about 5 to 6 hours, as we saw price confined within the 2,129 and the 2,125 area. And as at this point, we were looking forward to either the breakout of that range or the breakdown to give us an opportunity to trade. So we capitalized on the breakout at the breakout of the 2,129 level. Then we kept on adding more position, maximizing the potential of this bullish move. So we added 2,131.50. We also added one more at the 2,140 before we saw that volatility that took us out of all the buy positions yesterday, I think about 4 hours into the New York session. So for me, I got taken out at this point, but some of us did continue the momentum to the upside, as at this morning I got some couple of charts where some of us did show me what they did this morning. So it has been quite a profitable trade for us all in this community on this asset, as we were able to scope in close to close to 1,500 pips on this particular asset. So congratulations and well done to everyone who did capitalize on these opportunities. And if you are still having your buy position running at this particular point in time, I would encourage you to move your stop losses accordingly. Let's secure this position and let's see how far the momentum is going to go. And I will be suggesting that anywhere around the 2,153 and the 2,149 area seems most appropriate to move your stop losses to, as it is very, very likely we see some volatility happen around this area. And we all know the psychological expectation that is attributed to all-time highs, as it usually takes some time before price action acclimatize to this level. Now, what do I mean by that? Well, you see, when market participants capitalize on a move that leads to an all-time high, out of fear, some of the market participants will want to be taking some profits off the charts due to the fear of a potential crash happening from that area, because this is the first time price will come into this area. So market participants will not be settled within this zone, and this kind of reaction usually reflects on the chart as choppy market conditions, retracement move, or even consolidation phases. As you will see, something peculiar is already happening here in the last 5 hours. As you will see, choppy market conditions here, consolidation phase going on, which may likely lead to a retracement move before the uptrend continuation happens. So all of this needs to be taken into consideration while we review the current market structure. So with a well secured position at this juncture, what is our next line of action for today, and what is the fundamental saying as regards to how we will be positioning ourselves for the next move? Well, I just mentioned multiple times today how the Fed chair had emphasized that there is going to be an expectations for a potential interest rate cut later this year, and he also this also has put pressure on the US dollar, making gold more attractive to investors. Additionally, the ongoing geopolitical tension in the Middle East and worries about the war going on between the Israel and Gaza is also a fertile environment that supports appeal for safe haven assets such as the gold. Now, yesterday we had the Fed for Minneapolis, the Fed president for Minneapolis, Kashkari, who played down speculations about aggressive policy easing, which, coupled with a slight increase in the US Treasury bond yield, may be a limiting factor for the gold today. And you know how the US Treasury bond yield is directly proportional to the US dollar. So if the US Treasury bond yield is trying to gain momentum, then this will definitely reflect on the US dollar. So if this happens, we may likely see a retracement move happen today. As you will see, since price action tested that all-time high, we have been noticing some selling pressure here. So the retracement move, the bearish move, may not necessarily mean that price will be going to the downside. It may just be a short-term trading opportunity. And if we look at this structure from a technical standpoint, remember that during our live session yesterday, we did connected the series of higher lows since Monday's trading session, giving us a beautiful ascending trend line to work with. And of course, you know that when price remains above the ascending trend line, it makes a lot of sense for us to look out for patterns and structures that support the idea of buying. Now, if the selling pressure persists below the 2,158 level, we may see a situation where this whole character here transitions into a reversal pattern that may incite a retracement move back into the ascending trend line, which beautifully shares a confluence with that psychological level at the 2,140 area, where, depending on what happens here, will determine if we are going to be buying or selling more. Now, if we can see a reversal pattern here, like a double bottom structure, head and shoulder or falling wedge, we mark out the neckline and then buy the breakout retest of the neckline to join the uptrend continuation. But if price breaks down further, retest the ascending trend line, then this may likely incite a massive sell-off to the downside. So we shall look at these possibilities, and if we look at the distance between here and that structure, that's about 150 pips to catch here. So we shall be looking at the potential of capitalizing on that move. But I will be giving you updates as at when due. If we can find a reversal setup around this area, then we may likely join the bearish move to the downside. But with that being said, we have a buy stop order above the $2,158.50 level to welcome more buying opportunities if ever price action breaks out of that structure. Now, there are two ways to which you can capitalize on this. For those of us who are profitable so far this week, we can afford to place a buy stop order above this resistance level, since we've made significant amount of profit this week, so we can actually afford to risk some of the profit we have made to test waters around that area. And if it doesn't work, we know that we are only risking some of the profit we made, and if it works, all well and fine. But if you are joining us for the first time and this is your first time taking some opportunity here, that means you don't have any leverage to bank on. So what you're going to be doing is exercise patience and wait for price to retest the structure to give confirmations before jumping into any positions here. So this is my simple view on the XAUUSD for today. I hope I made myself clear, but if you have any questions whatsoever, feel free to let me know in the comment section, and please do not forget to give the video a thumbs up. I can see over 6 people on board here and the likes are still on 1. Let's make the like tally with the number of people on board, and thank you very much as you do so. So let's see if there are any questions whatsoever, and we shall come to round off on today's Forex Morning Mastery session. Thank you very much. So in the absence of no questions, I want to assume that we are all on the same page. And it's on this note we have come to the end of today's Forex Morning Mastery, where we were able to attend to all of the 3 assets on our watch list, which includes the USOILSPOT, the GBP/USD, and of course the XAUUSD, where we were able to manage our positions and of course strategically position ourselves for the next move using our basic tools such as trend lines, key levels, and chart patterns to guide our trading decisions for today. And I do hope you marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So let's see how the market will play out going forward. So all we just need to do is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to have a well-defined risk management strategy in place to protect your position against any sudden pullback that may come and go against our particular direction. For those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed. If you did, you want to be part of our subsequent edition. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and look forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for tomorrow's trading session, which promises to be another insightful one as market participants round off their trading activities ahead of the weekend. And of course, we all know how this rounding off usually brings some significant traction in the market, and we do want to be on standby to capitalize on them. So don't miss out on tomorrow's session, and see you tomorrow. Wishing you best of luck, trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.